Life insurance is a contract between an insurance policyholder and an insurer or assurer, where the insurer promises to pay a designated beneficiary a sum of money upon the death of an insured person. Depending on the contract, other events such as terminal illness or critical illness can also trigger payment. What is life insurance? Life insurance is a contract between a life insurance company and the policy owner. A life insurance policy guarantees the insurer pays a sum of money to one or more named beneficiaries when the insured person dies in exchange for premiums paid by the policyholder during their lifetime. Trade table of contents: insurance, life insurance. Life insurance. What it is, how it works, and how to buy a policy by Amy Fontinelle. Updated September 21st. 2023. Reviewed by Anthony Battle. 0 seconds of 1 minute, 28 seconds. What is life insurance? Life insurance is a contract between a life insurance company and the policy owner. A life insurance policy guarantees the insurer pays a sum of money to one or more named beneficiaries when the insured person dies in exchange for premiums paid by the policyholder during their lifetime. Key takeaways: life insurance is a legally binding contract that pays a death benefit to the policy owner when the insured person dies. For a life insurance policy to remain in force, the policyholder must pay a single premium up front or pay regular premiums over time. When the insured person dies, the policy's named beneficiaries will receive the policy's face value or death benefit. Term life insurance policies expire after a certain number of years. Permanent life insurance policies remain active until the insured dies, stops paying premiums, or surrenders the policy. A life insurance policy is only as good as the financial strength of the life insurance company that issues it. State guarantee funds may pay claims if the issuer can't. Types of life insurance: many different types of life insurance are available to meet all sorts of needs and preferences, depending on the short or long-term needs of the person to be insured. The major choice of whether to select temporary or permanent life insurance is important to consider. Term life insurance is renewable term life insurance with coverage decreasing over the life of the policy at a predetermined rate. Convertible term life insurance allows policyholders to convert a term policy to permanent insurance. Renewable term life insurance provides a quote for the year the policy is purchased. Premiums increase annually and are usually the least expensive term insurance in the beginning. Many term life insurance policies allow you to renew the contract on an annual basis once the term is up. This is one way to extend your life insurance coverage, but since the renewal rate is based on your current age, premiums can rise precipitously each year. A better solution for permanent coverage is to convert your term life insurance policy into a permanent policy. This is not an option on all term life policies. Look for a convertible term policy if this is important to you. Permanent life insurance. Permanent life insurance stays in force for the insured's entire life unless the policyholder stops paying the premiums or surrenders the policy. It's more expensive than term. Whole life insurance is a type of permanent life insurance. It accumulates a cash value in order to last the lifetime of the insured person. Cash value life insurance also allows the policyholder to use the cash value for many purposes, such as a source of loans or cash, or to pay policy premiums. Universal life insurance is a type of permanent life insurance with a cash value component that earns interest. Universal life features flexible premiums. Unlike term and whole life, the premiums can be adjusted over time and designed with a level death benefit or an increasing death benefit. Indexed universal life, IUL, is a type of universal life insurance that lets the policyholder earn a fixed or equity-indexed rate of return on the cash value component. It also has flexible premiums and can be designed with a level death benefit or an increasing death benefit. Top-rated companies to compare when shopping for insurance. You might want to start with our list of the best life insurance companies, some of which are listed below. Term versus permanent life insurance. Term life insurance differs from permanent life insurance in several ways but tends to best meet the needs of most people looking for affordable life insurance coverage. Term life insurance only lasts for a set period of time and pays a death benefit should the policyholder die before the term has expired. Permanent life insurance stays in effect as long as the policyholder pays the premium. Another critical difference involves premiums. Term life is generally much less expensive than permanent life because it does not involve building a cash value. Before you apply for life insurance, you should analyze your financial situation and determine how much money would be required to maintain your beneficiary's standard of living or meet the need for which you're purchasing a policy. Also, consider how long you'll need coverage for. For example, if you are the primary caretaker and have children 2 and 4 years old, you would want enough insurance to cover your custodial responsibilities until your children are grown up and able to support themselves. You might research the cost of hiring a nanny and a housekeeper or using commercial child care and cleaning services, then perhaps add money for education. Include any outstanding mortgage and retirement needs for your spouse in your life insurance calculation, especially if the spouse earns significantly less or is a stay-at-home parent. Add up what these costs would be over the next 16 or so years, add more for inflation, and that's the death benefit you might want to buy, if you can afford it. Burial or final expense after being approved for an insurance policy. If your health has improved and you've made positive lifestyle changes, you can request to be considered for a change in risk class. Even if it is found that you're in poorer health than at the initial underwriting, your premiums will not go up. If you're found to be in better health, then your premiums may decrease. You may also be able to buy additional coverage at a lower rate than you initially did. Life policies are legal contracts and the terms of each contract describe the limitations of the insured events. Often, specific exclusions written into the contract limit the liability of the insurer. Common examples include claims relating to suicide, fraud, war, riot, and civil commotion. Difficulties may arise where an event is not clearly defined.